Hi guys, welcome to a new video of my Forex trading course. In this video we are going to be talking about blending the news announcements with our regular technical analysis tools, okay? What we are going to be doing is, in one hand, we'll be looking at our typical trading scenarios, meaning trending scenarios, and then what we are going to do is to read the price spikes up on the news release. All right. Sometimes, as you know, when a news when a news announcement come out in the market, we usually see quite a significant spike on the chart. Well, we are going to be reading that price spike, okay, within the context of a trending scenario. All right, whatever I'm explaining in this video only applies or only works in trending scenarios. Otherwise, well, it's like anything in my system. Either you have a trend, or there is no trade, or there is no even consideration to take any trade. Okay, so as I was saying, we are going to be reading the price spike within the trending context. Okay. All right, guys. As you know, as I was saying before, when the news announcement come out in the market, sometimes we see quite a significant spike on our charts. Okay. That happens probably because the actual outcome, okay, the outcome of the news announcement, whatever the release is, might have been probably deviated from what the analysts had expected for that particular outcome, for that particular news announcement, okay? Analysts and market wizards, the New York Times, Bloomberg, all those people, they like to predict what's the most expected or most possible outcome for any major fundamental announcement, be it the inflation data, the unemployment data, the trade balance, the GDP. There are plenty of news announcements throughout the month, and if the actual number is better than expected, than what the analysts had expected, we usually see a bullish move, all right, a move to the upside. In the other hand, meaning a spike, okay, a very violent spike in the charts to the upside. In the other hand, if it's worse than expected, we should see a move to the downside, okay? In this case, well, of course, since we are looking at the GBP against the Canadian dollar, I'm talking about the sterling pound, all right? If we saw that the news were better than expected for the British economy, we should see quite a significant spike to the upside. If the announcement, in the other hand, was worse than expected for the British economy, well, the charts should, most of the times, at least from a short-term point of view, show some momentum, some heavy momentum to the downside, okay? Probably with a long one or two or few long bars, okay, in the direction of the deviation. That's usually how the news are played out, okay? Okay, now, as I was saying before, what we are going to do is we are going to read the spike within a trending scenario. Some people like to trade the news. I personally don't trade the news, okay? Please, guys, don't misunderstand me. What I do here is simply to read the spike, not to trade the spike, okay? Some people try to trade the spike. There are three main differences of trading the very spike in itself. First of all, straddling. Basically, this is current market price, and 20 seconds before the news, you place in your broker a buy stop order 20 pips above the current market price, and a sell stop order simultaneously 20 pips below. Okay, if price spikes to the upside, well, your buy stop order will be triggered and your broker will automatically fill you in along in the market. Conversely, if the price spikes to the downside, your sell stop order will be hit and therefore you will be short in that market at this level. Okay. The second way of trading the news is basically using auto-clicking softwares, which is basically a software that reads both what was the expected number, then right as the news come out, within the second it reads the actual number, and therefore it calculates the deviation between the actual result of the news and the expected figure, calculates whether it's a bullish or bearish deviation, and therefore automatically clicks buy or sell in your broker. Okay. What it aims to is, this is current market price. The news come in, there is a better than expected deviation. Bang! It clicks you long, and bang! The price takes off. And hopefully, the goal of this strategy is to be clicked in the position right as the move begins. Okay. And the third way of trading the news is what people call fading the news. All right. Basically, this is current market price. The news come out better than expected. Price spikes to the upside, and then the faders, what they do is they read price action in the very, very short term in order to trying to spot when the spike is dying out of momentum, when all those people trading the spike are closing in their positions, the spike is dying out, they enter short against the move, okay, trying to trade the retracement of the spike, okay. That's basically what fading the spike means. You want my opinion, guys? All right, my honest opinion, it's all bollocks. All right, there is no way of making consistent money doing this. At least not now. It used to be in the past. Auto-clicking software and straddling used to be a very profitable strategy quite a while ago. Unfortunately, it's been massified by marketers. It's been massified to oblivion. There are thousands of traders now trying to exploit the very spike in itself, and it just doesn't work. Okay, it just doesn't work anymore. Moreover, you are at your broker's mercy. At the end of the day, you are punching a market order at the highest volatility time ever. Okay, right when the news announcement hit the wires, price goes crazy. It's an emotion-filled market, and your broker can do absolutely it wants with you. All right, it can fill you right at the price you clicked, or it might slip your entry 20 pips above. It might respect your stop loss, or it may not respect your stop loss. It might get you out of the trade 20 pips after beyond the actual level you place your stop loss. It might respect your profit targets, or it might not respect your profit targets. Basically, when you are trading at such crazy at such a crazy time, your broker can do absolutely it wants to do with your order, and you have no case trying to defend if you've been, if your entry or exit levels were not respected, because all brokers, they basically they cover their own asses, and when you sign up for your account, in the fine print says one of the terms and conditions of every broker is, in high volatility markets, there is a possibility that we may not be able to respect your orders. That means that they can do whatever they want with you, and you have no case defending your position. All right. So like I say, it used to be a good way of making money, both auto-clicking and straddling the news. You cannot make consistent money out of it anymore. Okay, you can get away with it once, twice, but it's just not the way to go anymore, in my opinion. The way I personally trade the news is I simply read the spike as I was saying, within the trending scenario, in order to gather some information about the strength of the news. All right. In order to explain my point, I'm going to show you a real case scenario, okay, a real case study. In this case, we'll be looking into the GBP against the Canadian dollar of the 1 hour time frame, and we'll be looking at this part of the chart, okay? As you can see, first of all, as I was saying before, we are in a trending scenario. Those moving averages nicely point in the same direction, in order, no crossover whatsoever, price nowhere near the 100, the dynamic area of resistance holding price above very nicely. So basically, you know, the type of price market condition we like to trade, or I like to trade myself, okay? All right, in this context, we have the news coming out at this level. At this precise level, the 20th of September 2007 at 9:30 a.m. London time. An important news, one of the major news in the economical calendar throughout the month came out at that precise level, okay? At this level, there are three possible outcomes of this scenario. Firstly, the outcome of the news, okay, of the release, comes out as expected or with a very small deviation, and therefore price sees no spike either to the upside or nor to the downside. Price remains just as it should. In that case, nothing has changed. We are still in a downtrend scenario, and we'll be favoring our short entries, and we will be looking for short entries upon the next opportunity. All right? Nothing has changed. We are still, you know, the status quo is still in place. I don't know how you pronounce the status quo in English, to be honest. In my that's how we pronounce it in my language. But anyway, let's say the balance in the chart has remained unchanged, and therefore we are still nicely downtrending. Upon the next short opportunity, we will short this market. Okay, good, fair enough. Now, second possible scenario: the news came out for the GBP worse than expected, and price at this point plummets down. All right, we see a heavy momentum bar to the downside. It probably would have been a very nice move, since we are in a downtrend from a technical point of view, and then from a fundamental point of view, it's also bearish for the British economy, and therefore the sterling pound should weaken against the Canadian dollar. So it would be a nice, definitely a nice move to the downside. In this type of trading, in this type of outcomes, where the news, the fundamentals agree with the technicals, I'm not gonna focus on that scenario in this video, in this particular video, because I'm gonna be explaining you how to profit from those from that type of setups in the next video. Okay, so just scroll down my course in this chapter, and you will see another video where I talk about riding or trading trading setups where we have a clear trending scenario, and the news come deviated in the direction of the news, okay, and therefore we have a nice spike to the downside in the direction of the news. Like I say, watch the next video for that scenario. What I'm gonna be focusing here is on the third scenario, third type of outcome of this possible setup, which is a spike against the trend. Okay. That's what I'm going to be focusing on this video. In this case, in fact, as you can see, we can see two long green bars with long wicks. You see those long wicks? Okay, to the upside. Why did that happen? Well, it happened because if I look at my economical calendar, this is the Forex Factory. You can go to the links section of my website. You will have a direct link to the Forex Factory economical calendar. In my opinion, is one of the best. At 9:30 for the sterling pound, we had the retail sales. the expected number was flat, 0.0%, but the actual outcome of the news was 0.6%. All right, that's quite a large deviation as compared to the expected number, to the to what the analysts were expecting or had predicted. And like I say, this is quite a deviation. Quite a nice surprise, quite a positive surprise for the British economy, all right? Therefore, the GBP, since this is good, the retail sales announcement has been positive or better than expected, okay, more positive than expected for the British economy. Therefore, the sterling pound, the GBP should should rally against all the currencies, okay. In this case, remember, we were comparing it against the Canadian dollar. So upon that 0.6% better than expected news, we've seen 120 pips within 2 hours, okay. Have a look at those 2 1-hour bars, all right. So we've moved about 120 pips within 2 hours to the upside against the trend, okay. All right, at this time, like I say, I don't trade the initial spike, okay. I just let price go. I don't get involved in this market at all at that moment, all right, nor I try to predict when price is gonna top out and from there, search for a reversal in the 1 minute frame. No, why would I do that? That's way too risky. I'm not gonna gamble with my money, okay. What I do is I'm gonna read where the price is going to, how far it's gonna go, okay, at what level it's going to stop, or whether it's not going to stop at all and it's going to keep on breaching through levels of resistance, okay. First of all, breaking the dynamic area of resistance, then breaking the 100, etc., etc., and therefore breaking the trend, okay. That's what I'm gonna be doing. First of all, what I would do is mark my significant levels, my strongest levels of support. In this case is this around here, the 203.50. We have the 50% Fibonacci retracement right there. I've measured it already. We have the round number. We have this previous double bottom, okay, former support, then working as resistance right there. Okay, and also, of course, as usual, we have the dynamic area of resistance coming down there. All right, so we've determined that we have a very strong level of resistance right there. You see this level, that level right there, 203.50, 203.60 perhaps, around there. Okay, and of course, as usual, the dynamic area of resistance. Okay. Now the new, actually, let me zoom in a little bit for a clearer view. Where we are, there we are. All right, so the news came out. Price spikes 120 pips to the upside, okay, with this during the first 2 hours of London session. The news came out, and during the next 2 hours we see 2 long red bars with long wicks to the upside. But we can, at that time, like I say, I don't get involved with the trade. I don't get involved with the market at all. I'm just watching. I'm just reading price. I want to see, what I want to determine is whether this spike is going to break through this trend, is going to weaken this trend, or whether the trend is going to overwhelm the impact of the spike, the impact of the news onto the chart. Okay, in this case, the spike shoots to the upside, price rockets up 120 pips within 2 hours, comes to this area, the 203.50, as we had determined before. We have a number of different elements of resistance around there, former support, now working as resistance around there, the dynamic area, etc., etc. And price, well, we have this long wick bar, actually yes, a long green bar altogether. It stops still at the 203.50, but it doesn't punch through. All right, then we read the next bar. The next bar is not pushing price to the upside, is it? In fact, it turns out as a red bar. What about the next one? We are still reading, guys. We are not getting involved. What about the next one? Well, the next one comes as a red bar as well. This level is holding. Price rallied up here very quickly, 120 pips within 2 hours, like I say, very quickly, but momentum, all right, the buyers died out at this level. At this level, the sellers put their foot on this issue, and they said, well guys, I'm sorry, the party's over, you bulls can go home, because this is a bearish trend and it's going to prevail, the short-term impact from the news. All right, so the bulls, spurred by the news, show up in the picture, try to push price up at this level, at the strongest level of defense. They get totally rejected by the bears. Price cannot breach through the dynamic area of resistance, cannot breach through our strong level of support. Remember, former support, now resistance around there, 2 or 360, somewhere around there. This was the level to watch. Price doesn't even get up there, in fact, okay? Price fell shy about 20 pips from that level. It doesn't make new highs in this uptrend, okay? It keeps on making lower highs. All right, like I say, you've got plenty of hours to read all that. Okay, there is no need to rush your position here or here or here or here. No, wait, you've got 1, 2, 3, 4 1 hour bars. You've got 4 hours to read all this. Okay, take it easy, you know, make yourself a coffee. You've got plenty of time here. All right. So as I was saying, price doesn't even get up to the strongest level of defense. The bears are rejecting the bulls even before that level. Price keeps on making lower highs. All right, the dynamic area of resistance is not being breached. Price has gone nowhere near the 100. The 100 has never been challenged. Well, upon that rally to the upside, spurred by the news, fueled by the news, we begin to see, you know, red bars. And as this double bottom gives way and we make new low for the day in an enormous momentum, guys, enormous momentum, well, this was a beautiful opportunity, beautiful signal, okay, that the downtrend is still in place. Well, not only is it still in place, but also is still in place very strongly, because it's overwhelmed the impact of a quite positive news for the sterling pound. Okay. As I was saying, 0.6 deviation is quite a substantial deviation, and therefore quite a bullish, a good result for the British economy. But nonetheless, the sterling pound, despite the fact that the news, as per that particular fundamental announcement is concerned, was doing quite good, its currency, meaning the sterling pound, could not reach levels of resistance. It didn't even touch them. All right, it didn't even break the dynamic area. Okay, from there it simply turned around and made new lows for the day. The downtrend is very strong. Okay, it's proven that it's stronger than fundamentals. Okay, technicals are prevailing over fundamentals in this scenario. And like I say, as you make new lows for the day, right there, breaking this double bottom, what can I say, guys? Bang, you know, nice opportunity to the downside, and riding a whole new to the downside before it retraces back up to the dynamic area of resistance once again. So basically what we do, like I say, don't trade the fast move to the upside. You don't even try to you don't even need to try to pick the top of this move. Just let it go, let the dust settle. Okay, once the emotion, once the momentum has gone to normal levels, okay, to standard levels in this move, okay, in this particular junction of the chart, you will see entries much more clearer. Like I say, once again, you read price, you are just watching price in real time, spiking up, not breaking the trend. Remember, it has not made higher highs, it has not break the dynamic area, it has not break your levels of support and resistance, it has not touched the 100. I mean, in one sentence, the trend is still in place, right? Okay, from there we begin to retrace down and retrace farther down, and not only that, but we break our double bottom and we make a lower low for the day. And then what do we see throughout the for the rest of the day? A drop from 202.00 to 2.00, meaning 200 pip fall to the downside. Okay, what was at the beginning a very positive move, a very positive news for the GBP, once proven that the trend was stronger than the spike, many new sellers came into this market. Traders are not stupid, guys. They are all, or at least educated traders, are seeing what I'm explaining here. They are all seeing that this move up could not take out previous highs, could not take out levels of resistance, and from there, not only that, but price is making new lows for the day. The short positions, the short orders begin to fall in like a cascade. Okay, they begin to fall in order, one after the other one, because this is definitely a bearish market. Traders want to be bearish here. Okay, you have a downtrend, and the initial momentum against the trend died out very quickly. It couldn't break the trend. If it didn't break the trend, then I want to be with the trend, and therefore I want to enter short. Okay, that's the way I read price action around news time, guys. By the way, this is a technique that not many new traders know about, or if they know about it, they don't know how to use it. It's quite an advanced technique. Okay, it was, I learned it from a hedge fund manager, and it's enormously useful. Okay, it's very useful because it gives you the opportunity well, basically to examine to analyze the strength of the trend by comparing the trend with a move against the trend. Okay, with a strong and momentum-filled move against the trend. And therefore you have you have the chance to test, to analyze whether the trend, once the trend is challenged by a new spike with in a high deviation, okay, in a high momentum, you have the chance to to verify whether that trend is strong or not. In this case, like I've been explaining, we clearly proved that this was a very strong trend, and well, we've had it was a beautiful move once we made new lows for the day. If you were a little bit aggressive, okay, perhaps you would have liked to zoom into the 15-minute chart. Let me zoom back. This is the spike. This move up, and then this retrace down upon bouncing from the 20350. If you were aggressive, you would have perhaps traded the breakout of the retracement trend line. Okay, the breakout of the spike, okay, the retracement, the spikes retracement trend line, sorry, and perhaps you could have traded short there upon breaking this retracement trend line and this round number. That would have been a little bit aggressive. Okay, the more conservative the more conservative entry would have been as we broke in the direction of the main trend, that double bottom that I was showing you before. And well, as I was showing you before, we had a 200 pip to the downside after the breakouts. Okay, but nonetheless, I don't wanna focus as much as the entry itself, but as far as reading the spike in the context of a trending scenario, and and then compare, they then clash both elements one onto the other, the spike in one hand, the trend in the other hand. You put them together, and you just want to see which one comes on top. Okay, if the spike breaks the trend, okay, breaches the dynamic area of resistance, breaches your strongest levels of confluence of support and resistance, if it breaches the 100, etc., well, the party's over. You do nothing. The spike has prevailed. Okay, fair enough. You simply let this trade go, and you sit out of the trade. But if the trend, in the other hand, prevails over the spike, overwhelms the spike, and upon bouncing off those elements of resistance, the swing, the move fueled by the spike dies out, and from there begins to turn around, okay, in the direction of the main trend. Take your first entry, okay, your first technical entry, your first breakout in the direction of the trend, because chances are that you will be riding a very nice momentum in the direction of the main trend. As I was saying before, as more traders realize that the spike has failed, that the spike has lost the battle against the trend, more and more traders will be realizing that well, this is still a bearish market, and that they want, like I say, to either enter short or to be adding up to their already existing short opportunities, and therefore the trade will accelerate in the direction of the main trends. Okay, something that I've experienced many times, I've observed many times throughout the years. If the spike fails to break in a trending scenario, always, guys, remember, if you're in a trending scenario and the spikes and price spikes against the trend but fails to break levels of resistance, and basically fails to break the trend, look out for a very high momentum, very fast move in the direction of the main trend, meaning against the swing, because the swing has the spike has fizzled. Okay, the spike has lost the battle, and well, bang, move to the downside. Okay. Alright, guys, that's basically all for this video. Like I was saying, this is an advanced technique. Alright. At the beginning, it might be a little bit difficult to it might not be so easy for you to read price in real time as the spike unfolds, but with a little bit of practice, after your third, fourth, fifth spike against the trend, you will be able to read whether those levels of resistance hold, which side, which team wins the battle, either the spike or the trend, etc., etc. Okay. Alright, guys, that's all for this video. I hope you understood the concepts laid out in this video. But at any rate, if you have any doubt, if there is something, anything, whatever it is that you didn't quite understand, don't hesitate to drop me an email. I will very gladly get back to you as soon as possible. Alright? Okay, folks, that's all. Bye bye. Hi guys, this is Hector. Welcome to this new video. In this video I'm going to explain, I'm going to lay out a new strategy for you. It's a strategy that I use regularly, and it basically blends technical analysis trading with the fundamental analysis, with the news coming out in the market at one precise time. Okay, the trick of this technique is to basically exploit or use those news that come out regularly on the market, and use the momentum, the extra fuel that's influxed in the market by those news in order to strengthen that decision that was based on a technical analysis levels. Okay. In this case, I'm showing you the American dollar against the Canadian dollar on the 4 hours time frame. We are seeing a clear downtrend. Okay, as per my moving averages, all of them parallel to each other, pointing in the same direction, all of them in order, etc., etc. Price has retraced to the dynamic area of resistance, and moreover, if we zoom into the 1 hour time frame, we are possibly seeing a 1, 2, 3 formation. Okay, we have the highest peak, okay, then a retracement, then another attack by the bulls, but they cannot quite outtake the previous high, and from there we break the retracement trend line. All right. It's basically the typical swing trading strategy that I tried, okay, basically waiting for price to retrace to the dynamic area of resistance, and from there search for an entry. Okay, in this case, as I'm marking right now on the charts, it would be this area, the dynamic area of resistance. Also, you have the 38% Fibonacci there. Once price retraces to this area, you want to keep an eye on the breakout of the retracement trend line, which in this case it's happened. Okay, as you can see, we have a long red bar to the downside breaking the retracement trend line, and now we are going through what's the probably the pullback aspect of this of any breakout type of trade that I like to trade. Okay, always remember that I like to trade the breakout, pullback, continuation. All right, you've seen plenty of information about this technique on the chapter number 2 of this course. Okay, breakout, pullback, continuation. From a technical point of view, the entry would be below the breakout thrust. Okay, as soon as we go through the breakout and the pullback aspects, identify what's the low, the lowest point of the breakout aspect, and place your entry a couple of pips below that as you make new lows for the day. Okay, so from a technical point of view, this would be a valid entry in this case. All right. That will be the entry you want to be filled, or I personally like to be filled short in this market, hoping to ride a new swing to the downside, okay, in the direction of the main trend as seen in the setup chart, okay, as you can see here. All right, so in this case we have the news for the Canadian dollar coming out in the market in about 1 hour and 45 minutes, okay. And I'm going to try to exploit those news, the extra momentum of those news, in order to propel or to spur my entry in a much quicker, in a much higher momentum fashion than usual. Okay. If the news spike the chart to the upside, okay, definitely I don't want to be taking these trades. Okay, the trick of this technique is to use sell stop orders. Okay, you probably know that a sell stop order is an order that fills you in the market once price reaches that level. For example, if you place a sell stop order here, once price goes down to here, you will be filled short, okay, at this precise level. If you place a buy stop order here, if price continues retracing up at this level, your broker will fill you long on this market. Okay. As usual, since the trend is down, I would only be looking for trading to the shorts, to the short sides. Okay, so basically the only stop order that I would be considering on this setup is the sell stop order right below the low of the breakout thrust. Okay. Basically, this technique relies, like I say, on basing an entry of technical levels, okay, of technical analysis, but strengthening that signal with the news. All right. If the news come, like I said, we have Canadian dollar coming, Canadian fundamental announcement coming in the market in about 1 hour and 45 minutes. If that news spikes the price to the downside, my broker will fill me short at this level, and I will be riding a position that's backed up by both fundamentals and also technicals. Okay, like I said, the trick of this technique is to ask yourself, if there was no news coming out at this time, okay, let's imagine we have no news coming out at this time, would this be a valid entry? Okay, if entering short at this level would be a valid short entry. Well, the answer is yes. Okay, we've already seen that we have a clear downtrend, that price has reached the dynamic area of resistance, that we've broken the retracement trend line. Not only that, but also we've broken it. Now we're going through the pullback aspect, and well, hopefully we will get the continuation aspect too. Okay, so entering short at this level from a technical point of view would be a valid entry. All right, so what we want to do is 5 minutes, 1 minute before the news come out, I'm going to be placing a sell stop order right here, right a few pips below the low of the day. Okay, right there. If the news spike the price to the upside, okay, the news for the Canadian dollar come worse than expected, and therefore the USD against the CAD chart will spike to the upside, I will not be filled short in this setup. Okay. Remember that you only get filled on a sell stop order once price drops to that level. Okay, so if price spikes to the upside, you will not be filled on this trade. Okay, you simply cancel it, and well, no harm done. You are good to go. You are all right, because like I say, you are not positioned in this trade. In the other side, in the other hand, if price drops below here, the news come better than expected for the Canadian dollar, and therefore the American dollar against the CAD on this chart, the price will spike to the downside. You will be filled short in here, and the news will basically be carrying your position with momentum to the downside. Okay, that's the point of this technique. You're blending to the both sides of trading. You have a valid setup from a technical point of view, as I just explained, but also you will have the fundamentals, the momentum that well, any fundamental analysis brings into the market. We will also have it on your side. So basically, you are trading a setup based on technical levels, but strengthened by the extra momentum delivered by the news. Okay, that's the point of this technique. It's not that you are trading the news. Okay, you are trading technical analysis still. Okay, it's not like you are altering the typical 3 simple moving average system techniques or trading routine. Okay, you are still trading the same system, but you are adding, or you are exploiting that extra momentum delivered by the news. Okay, so like I say, 1-2 minutes before the news, I will place a sell stop order at 104.20. Once again, if price spikes to the upside, I will immediately cancel this entry. Okay, and no harm is done. You are not positioned in this trade. In the other side, if price spikes to the downside, your broker will fill you short. My broker will fill me short at that level at 104.20, and I will be riding a short position that's got in one hand the technicals, and in the other hand the fundamentals on my side. All right, that's the point of this technique. You're trading the technicals, and the fundamentals will probably, the news will probably carry that position in a much higher momentum, and will drive, hopefully will drive price to the downside much quicker. Okay, much faster, and basically will be a sound entry. Okay, you are blending both worlds, the fundamental and the technical analysis. Yes, just by adding a sell stop order here, you make sure that if the news come against you, well, price spikes to the upside, you cancel this order very quickly. That's it. You're good. No worries. You're not positioned in this market. If they go, if the price spikes to the downside, you are filled at the right level from a technical point of view. All right. Once again, you are not trading off the fundamentals. You are trading off the technicals. Yes, having your trade spurred or boosted by your, or you know, strengthened by the announcement coming out in the market. Okay. I'm going to be pausing now the video, guys. I will resume the video 1 minute before the news come out in the market. You will see how I place a sell stop order right here, and you will see how the what's the final outcome of this trade. I am fairly confident that if the news spike the price to the downside, I will be writing a sound entry on this trade. Okay. Alright guys, I'm pausing the video now and I will keep you updated. Bye bye. Hi guys, and welcome again to the second part of the video. The news have just come out, and one of the two scenarios that were possible, remember, one of them was prices back into the upside, in which case we would have cancelled the entry, the seller stop entry, and the second possible outcome of this scenario was what's actually happened. We've had the spike to the downside, and as you can see, price this is my sell stop order right there at 104.22. As you can see, price upon releasing the news is just basically shot to the upside. Okay, and I'm effectively in the trade. Entry level is 104.22, sorry, and basically I am riding this position, helped by the momentum delivered by the news. Okay. It seems like it's definitely a good entry. Like I was saying before, I have both the trend, the technicals, such as this breakout pattern, and now I also have the news, okay, on my side. I am fairly confident that this is going to be a sound trade. First target is going to be the low for the week, okay, at 104.00 round number, in which at which area I will move stock to break even, and I will close out half of my position. All right, but like I say, this definitely seems like it's going to be a sound entry. I have many factors on my side: the technicals, the fundamentals, the trend, etc. And that's basically what this sell stop order, or sell stop in this case, since we're in a downtrend, it would have been a buy stop orders if we had been on an uptrend. But nonetheless, this is the technique that I wanted to show you guys today. And you see, you see the clear momentum that this position is carrying to the downside. Okay, have a look at that beautiful long red bar, triggering my sell stop order and pushing price in momentum. Okay, very quickly in my direction. Okay, that's the whole point of this technique. Alright guys, I hope you've understood this technique. Okay, if you have any question, as usual, please feel free to send me an email. But the important thing here is to remember that you are not trading the news. Okay, you are still trading technicals. You are just being aided. You are just being helped by the news, okay, by the momentum of the news. But still, the decision is based on our three simple moving average trading system. Is still based on our technical analysis, breakout, pullback, continuation. Okay, it's the same thing we usually trade. It's just that we are adding another factor on our favor. Okay, we are not changing our trading approach. We are just adding new factors on our favor to help us achieving our goal, our trading, our price target in a much quicker fashion. Okay. Alright guys, like I was saying, if you have any doubt, please don't hesitate to contact me. Okay, I will be very glad to help to answer all your questions. Alright guys, bye bye. Hi guys, this is Sector. Today is the 24th of July 2007. It's 1:15 London time, and I've placed, I'm gonna place a buy stop order at a few pips above the 0.9250 round number. We have the news coming from Canada very shortly, and like I said, I'm gonna place a buy stop here. Just to I'm seeing a very valid setup from a technical point of view. As you can see, we are seeing this nicely uptrending scenario with swings, well, basically taking off and ending at the dynamic area of support, which is the kind of price action I like to see. Moreover, I'm seeing this previous double top former resistance now working as support, along with the 61% Fibonacci, and well, we have the retracement trend line being broken right there. Okay, this retracement trend line I'm talking about, with a breakout pullback and perhaps now a continuation. Like I said, we have news coming out very soon. I'm going to place a buy stop order a few pips above the round number, and above the breakout thrust. If the news spike the price to the upside, I will be filled long in this market. And if the news spikes to the downside, up on the news, I will simply cancel this buy stop order. I'm basically trading technical a setup based on technicals, but I'm looking for basically riding the news delivered momentums. Okay, all the momentum that comes in the market as the news are released, if they happen in the direction of the main trend and backed up by my technical analysis, well, I want to exploit that extra momentum on my side. Okay, hopefully riding a news swing to the upside. All right. Like I said, news are coming out in 15 minutes, so I will keep you updated as soon as the news take place. All right. Okay. Bye bye. Hi guys, this is Hector again. The news have just come out, and well, as you can see, it's a driven price to the downside big time. So therefore, I'm going to manually cancel this buy stop order right there. Important thing, as usual, as you can see, if you place the buy stop order barely few moments before the news come out, either they go your direction. If they go into the other direction, it's a no loss situation. You just click on the buy stop order and cancel it out. Okay, so like I say, no harm in trying. Okay, it was a nice setup from a technical point of view. Fortunately, the news came out in the wrong side of my interests in this case. So you know, just simply backpedal a little bit, cancel this stop order, and well, basically that's about it. No trade taken. If we had triggered our trade in the direction of the main trend, we would have seen a nice move to the upside. If we've seen this down move counter trend, if the signal would have come in the direction of the trend, it probably would have been much larger, since you had all the market sentiment on the side, okay, on our side. Alright guys, that's all. Bye bye.